Hello, good day. Welcome to Plan B. In focus, the banking sector and the union budget. And of course, I'm joined by my old friend, Srinath Sridharan, independent markets commentator. Now, because he's independent, he has some ideas, he has some recommendations. Srini, you wrote a column on the 7th of December in a national business daily. It's called The Mint. Now, you highlighted, and you also wrote something similar for Business World as well, if I remember. You highlighted something about banking licenses, simplifying banking licenses, customizing banking licenses, and segmenting them. Firstly, can you tell our viewers about that insight and recommendation which you made?
Sure. So I'm calling for simplifying banking license into just about two categories. One is the universal bank license, as we call it, which can do almost everything that the conventional universal banks do. Mm-hmm. And I'm saying let's have specialized focus banks. And I'm not slotting them, but I'm going from the consumer segment point of view. And which means that can you have a SME bank? Can you have a mortgage bank? Can you have infrastructure bank? Can you have, let's say, MSME bank? And background to this idea is only one simple thing. If you go back to last few decades of Indian banking, right from the time we nationalized the banks, and we have added various categories of bank from regulation perspective and supervision perspective, but not necessarily from the consumer segment perspective. And in the last 30, 40 years, India has grown into what it is today. And the last, let's say, at least 7-8 years, we have had fantastic, the JAM Trinity, Chandan, Aadhaar, and mobile. Even if you go to a smaller town, there is an access to a mobile phone. If not a smartphone, there's at least a mobile phone available. How do we then, why are we still unbanked? Why is credit access still very, very low? Even in the last few months of this COVID economy, we have had various criticism and comments saying that liquidity, surplus liquidity hai banko ke paas, but it has not gone down to the market. I'm saying let's simplify, let's look at all the categories of banking licenses. What we did in the past may not hold good in the future or even in the current. What do our consumers want? Can we segment our consumers? It does not mean just because banks have enough branches in urban pockets that everybody living in the same urban pockets get access to credit. It is not true. We'll have to look at the consumer segments. So can we bring in specialized banks to focus? And that is where the idea is. Universal bank can do, let's say, all the categories of consumer segments. But if you are a SME bank, at least 80% of your retail assets that you grow has to be only for SME. If you are a mortgage bank, at least 80% of your lending should be only for mortgage customers or developers. And why am I saying we should bring back specialized or focused bank? While I'm also very, very cognizant there have been some criticism about SFBs and the questions whether they're viable, or the payment banks whether they're viable. I think we have to be very, very pragmatic of what does each of these consumers want.
Because you spoke about being pragmatic, there are also some real life challenges which comes along with these suggestions. For example, if the real estate market goes down, then the bank associated with only that sector also goes down. Now, the bankings do not only work on loans, right? They also work on deposits. So is there a solution mechanism you have in place? Because if we allocate, it's like putting all your eggs in one basket. If we allocate one bank for one particular category, and if that category goes down, the entire the entire bank goes down. And as a result, a lot of people lose their jobs as well. So is there any solution in place you have for that?
So I'm glad that you asked this, because even today, do you think the flavor of the season is not existing? The banks have also, especially the listed banks, have behaved basis the sentiment of the market. And here, when I say market, I'm not talking about their consumer segments. I'm talking about their investors, their retail investors. So they've been doing the flavor of the season, which means retail. The moment moratorium was announced, the interest on interest moratorium was announced, suddenly retail became a very, very bad word. Everybody is saying, can we go and lend money to SME, MSME or corporate banking? And this is not new. This has been happening for quite some time. Which is why even in the past I've said that we must give credit to public sector bank, because they've done some heavy lifting in the real economy space. And this flavor of the season, if we can stop it by saying that I understand you are a mortgage bank where on one side you're lending for 10 to 15 years, but you may not have sufficient debt papers when you take deposits. It could be as low as 1 year. So there would be an intrinsic asset liability mismatch, what we call as ALM. And it will also help the regulator to have different ALM ratios that they want to maintain and track, saying that what could be dangerous and what could be a safe zone. So if you're a mortgage bank, your ALM is matched, I will be able to tolerate to a certain zone. And whereas if you're a SME bank, or if you're, let's say, a SME bank with a short tenure of 3-year loan, where it'll almost kind of match each other, because you're going to lend for 3 years and you're also going to take deposits maximum of 3 years. So it'll match for itself. So if you have specialized banks, you're also, what you track as financial ratios for fiscal stability can be managed better. But today, it's one size fits all, one rule fits all.
Again, coming back to the original question, which I keep asking you in every session, which we are having. Number one, because RBI also came up with a recommendation of allowing corporates to own banks or increase their stake in the banks. What is the probability of cartelization not happening because of this framework of yours? Number one. Number two, is there a possibility, how much bandwidth does the finance minister have to make adjustments to adjust this recommendation of yours?
So, it's easier to answer the second one quickly. I mean, I cannot speak for the finance minister, and I think this is going to be one of the toughest budget in terms of expectation on the finance minister, because everybody has, including me, has 10 ideas or 20 ideas to give, and the fiscal space for them to move is very, very limited. And having said that, I've always said that this is a great time. A crisis like this doesn't come very often. We must be bold and brave in trying reforms. Some will succeed, some will spectacularly fail. But if you're going to worry about failure, we can never start. So I think my only wish list would be, let us try path-making reforms. And some of the reforms could be, let's say, we simplify banking. When Aadhaar was launched, or even FDI and life insurance was launched, some of these had been pending for years before that. But somebody took a political judgment and said, let's try it out.
Srini, if I make a book reader watch this interview, then if he reads this book called The Magic of Thinking Big, he'll be very delighted with what you're saying. But the moment he reads Tamal Bandyopadhyay's kitab, Pandemonium, he will have questions. So I would just request you to go back to the first part of the question. How will we regulate cartelization not happening in this?
So very simple. I think, which is what the other part of my article that you alluded to spoke about, of how we need integrated real-time digital supervision. Today, each of the financial services entities are under different regulators, be it the RBI or SEBI or IRDA or PFRD or NHB. They follow different regulations and they have different supervision. And depending on the size and scale of the company, some of them are systemically important and most of them are not systemically important, which means that they do not really come under the shadow of supervision very, very frequently. And it is those hits and misses that actually can make or mar large fiscal stability. And I'm proposing that today, most individuals and companies have enough identity that you can track, be it your PAN number, Aadhaar number, DIN number, GST registration, everything. And in your KYC, if you're a financial services company or a client, you have all of this. Why can't we use enough real-time supervision to say that what's happening? And to your point about one of the criticism about why corporate should not be allowed is that they are also substantial borrowers in the banking sector, and that has been one of the criticisms.
Exactly.
And I call it the if you like the Mario Puzo's novel and the book series and a movie series called Godfather. And I almost call it that if corporates were to be given banking license, I call it the going legit moment. It is the part 3 of Godfather movie. That if you are going legit, because if you're going to apply for a banking license, your entire trail of your behavior in the past, of what you have been and what you are today, has to be submitted to the regulator for a fit and proper. And rightfully so, because you're going to actually take public deposits. And it is all, I'm not even worried about that, but I'm saying that even if whether you allow corporates or you don't allow corporates, how do you track how money is moving between various financial services, not just about banks? Today, insurance companies are what they collect as premium, they're investing back into the industry. And these are corpuses which, as insurance customers, we are hoping that is going to stay safe for the next 15 to 20 years. That's how you will actually get your life insurance paid or medical claim paid when you want it.
You did mention human capability in your article, I remember.
Yep.
Okay, the last part of this column. And again, you mentioned Godfather. We know how it ended, right? So, I would just like your closing remarks on this. How practical and feasible do you think this idea is? Because I know, like, if we do a survey of the bankers and ask them how practical is this idea, I'm pretty sure you know the answer.
Oh, absolutely. I can tell you 99.99% won't want it. But if you ask the technology companies, even in our country, not just abroad, is this commercially available, these kinds of, let's say, supervisory softwares and tools and analytical engines? They're all available. It is about probably putting together a framework or an authority, like, let's say, for Aadhaar, we had UIDAI. Under the Fiscal Stability Council, why can't we actually put up a framework and say, let's bring all the regulators, let's bring technology experts, supervision experts, and actually build a framework for India? And I'm calling it the decade of India. This budget for me is the decade of India. And if we have to be strong fiscally, it is not just about investing money and growing the money, but is also ensuring a stronger supervision. So I'm saying, is this commercially available? It is commercially available. Is it technology? It is commercially available technology. Are manpower and skill set available? It is available locally. Your current bankers, ex-bankers, your current financiers, ex-financiers, all of them have this. It is about coming together and saying, how do we build a stable ecosystem for the future? And I'm using this word, this can be the decade of India if we start with the right foundation.
Sure, and because Srini mentioned, is technology available? It's available. Manpower available? It's available. Resources available? Yes, they're available. I think the bottom line is the intent available or not? And we'll get to see that. This is the closing remark from this episode of the Plan B Show. Stay tuned for the next episodes. We'll be joined by Srini in the future as well. It's bye-bye for now. Stay tuned to Plan B. Thank you, Srini. Thank you so much for your time.
Thank you.